Are you wondering if life insurance is really worth it or how to choose the right policy for you and your family? In today's episode, we're breaking down what really matters when it comes to life insurance, from term, whole life, and indexed universal life options to the coverage that gives you, that's right, you, living benefits as well as true financial protection for your loved ones. You'll discover how smart financial planning and wealth management can turn your policy into a powerful tool for long-term savings, retirement planning, and your family's future security. When I learned what I'm discussing today, I was a single person who saw no need for life insurance. What I learned changed my life, my retirement, and my financial future. So stick around. This might be the smartest decision that you make this year. Hi. Today we're going to be talking about what you really need to know about life insurance. As you might guess, this is not a good opening line at a cocktail party or sitting next to somebody on an airplane, but you're here to listen and hopefully pick up a couple of things you may not have known that's going to help you and your family on your best financial track. So I'm going to share some stories along the way because I find that my clients remember the stories better and that helps them to remember the facts. So here we go. Let's explore what you need to know. Medical professionals, you're no stranger to making critical decisions every day when your patients need you the most. But sometimes when it comes to your financial health, there are things you may not be looking at because they're not part of your daily job. So you dedicate your lives to helping others, but what if something happened to you? You see this all the time, right? But is your family's financial security covered if something happened to you? Let me say that a different way. What happens to your family financially if you were to pass away tomorrow? Are they covered? Have you thought about for how long? Life insurance is one of those things that generally people don't want to talk about. And that's why we're here today, to learn some things you may not have known. So first priority is protecting your loved ones. And in addition to that, one of the key things we're going to discuss today is how personally life insurance can help you while you're still alive. That's right. Life insurance can help you while you're still alive. And it's not just about the dying. For pennies on the dollar, I'm going to say that again. For pennies on the dollar, meaning the reward is much higher than the money paid, life insurance provides a safety net, ensuring that your family can maintain their lifestyle even in your absence. Think about that. What does it cost your household for their current lifestyle? Would you want it to be drastically different if you were gone? Consider from paying off debts to covering daily expenses. Would the family have to move to a more affordable home? Would the kids be able to stay in the same schools that they were in while you were alive? So the goal is to provide peace of mind and ensure your family's stability during this really difficult time. So I have a client couple that started working with me about 8 years ago, and we put a plan in place for multiple reasons. We'll talk about some of those later, but mainly to look after her if something happened to him. So we knew his health wasn't as good, still healthy, but she was healthier than he was. And last year, he passed away at the age of 58 years old after a 2-year battle with terminal cancer. So while we'd put a plan in place, there were still issues we couldn't have known about related to the retirement income that was coming in. So it was shut off. It was shut off for months. I'm going to say that again. The retirement income was shut off for months, and there was an entire slow government process to go through to get it turned back on again. So while we're talking about maintaining lifestyle, what if it's the only income that the family has, even if just for a while? What I'm saying here is, what if the events that happen cause it that the only income that's coming in for them to live off of for a while is the death benefit off of policy? So this was scary for all of us, even though they were covered. No way to see this one coming. So our goal is to provide peace of mind and ensure your family's stability during these difficult times. Okay, so choosing the right type of policy for you. I'm going to say that again, for you. There's lots of people out there spouting what they want to do, what's the best way. What I can tell you is that all of these that we've shown are things that can be quoted. You can quote all of those at the same time, okay? So there's different types of life insurance, and each one of those is tailored for specific needs. We're going to spend a bit of time here discussing the 3 types. So first is term life. That is exactly what it is. Term means for a certain term, certain period of time. The attraction to term insurance is the price. It's cheaper than permanent insurance. It is the cheapest insurance. And if you're getting quotes on this, the prices can be different between different companies. So people often buy term to cover a specific period of time, get the kids through high school or college. That's a popular one, meaning if something happened to you, there's a death benefit to help pay for their college. So while this may seem like a long time, 10, 20, 30 years out, it's still considered temporary insurance because it's for a specific term, whatever's been named. Okay, so the key point here is that once you hit the end of the term and you want to renew it, it usually has gone up significantly in price. It may have doubled, it may have tripled. Okay, so what you probably didn't know is that term insurance only pays out 2 to 3% of the time. Term insurance only pays out 2 to 3% of the time. And you go, why is that? Why are you telling us this? Well, because you actually have to guess when you're going to die. And when I say you have to guess when you're going to die, you have to be insured when you die. So most people have already closed out their term insurance because the prices got higher, so that when they actually passed away, they don't have any term insurance in place. Okay. So term was the first type of life insurance. One other thing I'm going to say here is that there's a saying out there in the financial world that is buy term and invest the difference. Okay. While this sounds good, it doesn't really happen. People spend the money. Okay. I have yet to meet anyone who bought term and invested the difference, and actually, that they actually did it, or two, the possibility that they would have come out ahead. Okay. So if you're hearing that, buy term and invest the difference, you need to put some question marks on there and say, I also have to guess when I'm going to die for the thing to pay out. And at the end of the day, you're buying insurance to make sure you're covered, right? So we want to make sure you're covered. So next came whole life insurance. The idea was to be insured for your whole life. Pretty profound, huh? Whole life is for your whole life. So it's more expensive than term. It's got fixed premiums and cash value accumulation. So what does that mean? It means that you're paying more than the actual cost of the insurance, and the extra cash is growing inside the policy for you. Okay. There's lots of benefits to that, having the cash invested, shouldn't say invested, but the cash is working for you and it's being paid out in dividends every year. So whole life insurance, fixed premiums, cash value accumulation, good for your whole life. Okay. Hopefully you can remember that. So after whole life came indexed universal life. Again, lifetime coverage, fixed premiums, and cash accumulation on the money put in that exceeds what's required for the premium. All right. So in both of those types of permanent insurance, there's some other stuff that's out there, but in both those general categories, if you're putting more than the premiums in there, that's accumulating for your benefit. And typically that is growing tax advantaged, which means if we do it right and we structure it right, then you're not going to pay taxes on the money coming out. The key difference here for the index universal life is that the annual interest is tied to the stock market. Okay, so for example, the market grew 15% in 1 year. You'd get your return indexed to the market. One thing to note here is that there's no negative returns. Okay, for example, the market drops 20% in a year, your return would be zero, which is a whole lot better than a negative 20%, like in our 401ks. So they're all different, and it depends on not only what you need, but what you want. So the question is, first off, is what do you need? What kind of coverage do you need? And then the second one is, what do you want? What do you want this to do for you? One of my mentors out there, one of the best things that he ever said was, don't look at what it is, but look at what it does. So don't look at what it is, look at what it does. So if you want more specifics on any of these, or you'd like for me to review what you've got, feel free to book a call, and we'll tell you how to do that a little later in the episode. So determining how much life insurance you need starts with understanding your family's financial needs. Okay. Think about income replacement, future expenses, and any debts that you leave behind. So this is your lifestyle, right? This calculation ensures that your loved ones stay financially secure. Okay. All that being said, let's do some math. When you go online, there's all types of calculators and all this stuff and all these things that you can enter into the system. But I think this is probably the simplest. Life isn't getting any cheaper. We know that. It doesn't really matter exactly what your electric bill is, what your mortgage is. The question is, what are you living off of right now? So what I want you to do is take your annual salary and divide it by 50. So the example here is a salary of $200,000 per year. So we're going to divide that by 50. So 200 divided by 50 equals 4. All right. Now I want you to think about this, that number 4, and we're saying that comes out to 4 million. So if we had $4 million invested at 5% per year, that generates $200,000 in income for life. Okay. So this means that your $200,000 in income is covered as long as it's invested at a 5% return. So if you have $1 million in death benefit and a $200,000 salary, your loved ones are going to run out of money roughly between 5 and 6 years. So that's not good. And remember that if you're gone and you were the investment person, how do they figure that out too? That's what I'm seeing over and over, is that the person that's passing away is the person that handled the money. So the question I would have here is, if you've spent years figuring that out or being the guy or the gal that does that for the family, how do you expect that the person that you leave behind that hasn't been actively involved in that, they're going to figure that out quick enough that it's going to make a difference? Okay. So one other note here is that the death benefit is typically tax-free. And I would say that your 401k is not. Your 401k is income that's deferred, but it is not tax-free. So what are the living benefits that I alluded to earlier? Okay, with some companies and specific policies, i.e. not all companies and all policies, they have a feature rider for living benefits. Okay, often this is included and there's no additional cost to it. So these are a way to apply the death benefit while you're alive if you become terminally ill, get a critical illness or injury, or a chronic illness, which means you can't do two of the functions of daily living. If you qualify, there can even be an Alzheimer's benefit, as you see in the example here. So all of these have to be documented by a doctor. And here's an example of a recent policy from a company that provides these living benefits based on the death benefit and the health of the insured. If you look at this here, you're going to see each of those listed: terminal illness, chronic illness, critical illness, critical injury benefit, Alzheimer's death benefit. This is based on a policy that we started, with a higher death benefit in there. It's not huge, but the question is, if you need these things, this is a way for you to activate this inside the policy versus drawing from your other resources like your bank accounts and your investments. Okay. I think this is an incredible feature and great insurance as we age and have no idea what the future may hold for our health. One thing I'd like you to think about is it's not only for the working person, but potentially the spouse. Because what happens if the spouse passes away? Now the working person is going to have to pick up a lot more responsibilities to cover that, right? And I'd say a lot more responsibilities and potentially more expense. So I myself have policies to do this. And I bought these when I was single because these were the things that I wanted covered, right? I was a single person. I didn't care about death benefit, but I did want something that was going to cover these illnesses if I got them. Okay. So these benefits are included with the life insurance. Like I said, specific companies, specific policies. If you don't use them, they didn't cost you anything, and your cash inside the policy keeps on growing. One statistic that you may not know is that 70% of people will need some sort of living benefit during their lifetime. This is why I got mine covered. It was the whole picture, right? I wanted to say, what can I do inside of one of these policies? What are the living benefits? What do I really want? And what do I need? And remember, think about what it does, not about what it is, right? We've got our stigmas about all kinds of things in life, but think about what it does, not what it is. So we've talked a lot today about life insurance and protecting your loved ones as well as yourself. If you want me to serve you more and would like a quick call to discuss any of this, or if you've been thinking about money and retirement, or are tired of thinking about it, or don't know where you are, or maybe where to start, or even looking for a second opinion, just like a medical diagnosis, it's probably time for a quick calibration check on what you're doing. We can do that easily on a 15-minute triage call when we talk about it. So don't overthink it. Stop waiting for the perfect time. There is no perfect time. I recently did this call for a medical professional and found $7,400 a year without even getting into my process. Think about that. $7,400 a year for a 15-minute call. I'd say that's a pretty great return on investment, don't you? That's what I love about what I do. I find the money. This is how we can get things moving and set you up for a great year and beyond. So let's do this. We'll see you soon.